What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is a little bit of the price action that we saw throughout last week, looking at the longer term technicals to give us an indication of where potentially we could see AMC going over the next couple of weeks. Now, in addition to this, we are going to be talking briefly about the Ortex short interest utilization cost to borrow numbers on both AMC and GME, because still these numbers are absolutely wild, getting unbelievably out of control, which eventually is going to come back and benefit us, in my opinion. Now, there's been a couple of things, some emails, some things that have been getting spread around over the last 24 hours that I really want to bring to your guys' attention. The forced share recalls and forced liquidations of some short positions are starting. We're going to go over a couple of research reports just so we can kind of get you guys on the same page to understand what this actually means, then break down the actual notice that was sent out, because this is really important going over the next couple of weeks. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. And again, guys, if you do want to get grandfathered into the 1348 Discord with me, TMI, and Gabe, make sure you check out that link down below. We have real-time options data with a lot of things coming along with that in the near future. We have more algorithms coming, more one-on-one training, more live streams to make sure that you guys have the best place to come and learn how to successfully trade. So AMC closed the day on Friday at $12.45. Definitely not the day that we wanted to see. Again, market was pretty volatile. We did end up closing down about 6.39%. But when we take a look at the longer term technicals here, we kind of would expect these types of moves to happen after we see this rejection of the 200 EMA. Now, we are about to get that 1348 cross down on the 4 hour. We have the MACD coming down as well, but we do have this kind of double bottom level down here where we could end up basing. So it is possible that we do end up coming down a little bit lower. But again, remember, with the fundamentals of the company continually increasing, the crazy amount of short interest getting piled into these two stocks continually rising. Again, nothing has changed. And with what we've seen out of Adam Aron's statements about the ownership of AMC, the apes are not leaving. So again, we would like to see this clean break of this 200 EMA on the 4 hour, the 1348 cross to the upside, if it then ends up crossing down before, and the MACD coming back to the upside as well. So those are kind of the things that we are looking for. Remember, keep it simple, don't overcomplicate it. And that's kind of the name of the game. Now, when we come over to the Ortex numbers here on AMC, 23.43% estimated short interest. Crazy. 14.05% average cost to borrow, 19.21% max. So for those of you guys that were wondering, when were we going to see the cost to borrow increase with 100% utilization for months, shares on loan continually making all-time highs? Well, we are finally starting to see these cost to borrow numbers aggressively step up. Now, on Monday, with the amount of shares that were borrowed on Friday, 3.89 million, with a total net borrow of about 3 million, we're going to most likely crack over, depending on if there's any weird glitches or recalibrations in Ortex's data. We're going to see shares on loan get over 180 million, another all-time high, which is going to further increase the cost to borrow, which is very, very important for what we are about to talk about with these forced share recalls and forced liquidations. Now, when we come over to GameStop's data right here, 28.24% estimated short interest, 130% average cost to borrow, 261% max. Again, very, very high. 37.38% of the free float is on loan. Very crazy numbers across the board. Now, firstly, I kind of want to bring us over to Stonko Tracker really quickly before we kind of start getting into this forced share recall situation. So on Stonko Tracker specifically, it is stating that there's 0 shares available to borrow on GameStop. Now let's take a quick look on AMC and see what they have here. About 150,000 at 10.6% on that cost to borrow. Now, we've talked about this a couple of times in the past, but the utilization, the cost to borrow, and what that means for forced share recall. So let's give this a little bit of a refresher before we get into this actual notice that was sent out. So this is a research report from Paul Schultz, a University of Notre Dame professor. Now, he kind of outlines this right here, but the most important part that I want to kind of bring your guys' attention to is right here. But while these papers examine the impact of short selling risk on stock returns and market efficiency, this paper studies what makes a stock risky to short. Each of these short selling risks is tied to utilization or the proportion of shares available to lend that are actually on loan. To proxy for the risk that a loan recall may force a short seller to close a position, I use an equal reduction in shares available to lend and shares on loan on the same day. For most stocks, this is a rare event. For easily borrowed stock, I estimate that a forced share recall occurs once in about 8 years. For stocks with utilization above 75%, which AMC and GME are most definitely at the current time, even though we've kind of flatlined at that 100% utilization, which I don't necessarily believe has been correct over these months. Forced share recalls occur in about once in every 26 days. So every single day, there's about 1 in 26 chance that there's a forced share recall going out. Now, that's for typical normal situations with a stock that has utilization over 75%. What about a stock like AMC or GME that is aggressively shorted? There's the high potential for so many shares to be out there shorted that have not actually been accounted for. And that's where we get into this right here. So when we come over to this notice, as a result, this is from Interactive Brokers, as a result of short sale transactions executed 2 or more business days ago, your account has a delivery obligation in the stocks listed below and or has borrowed shares from IBKR. Now, guys, this is not my screenshot. I didn't get this email. I'm not shorting GME right now for those of you guys that are confused and may want to cause some problems in the comment section. So let's see. So has a delivery obligation in the stocks listed below and or has borrowed shares from Interactive Brokers to make delivery on a short position that has not been closed yet. Interactive Brokers is issuing this advisory to inform you that IBKR has been unable to borrow the shares necessary to meet its delivery obligation. We will continue to attempt to borrow the shares. However, if we are unable to do so by 9 Eastern time on the next settlement date, we are obligated by the SEC Rule 204 to close out these positions, meaning a forced share recall or a forced liquidation for any of these accounts that have a short position that they were not able to get the shares for. A list of these positions is provided below. We will attempt to notify you on a best efforts basis as to whether we have been able to borrow shares prior to the close of business day. In the interim, should you wish to remove the uncertainty of a forced closeout, you may do so by closing the full amount of your short position in these securities on your own by 1600 Eastern today. Additional information regarding the closeout process may be found here. The position subject to closeout, 65 shares of GameStop. So these institutions, these lending institutions right now, do not have the shares. They are not able to meet what is called the locate requirements in order to facilitate more short sales. What this leads them to do is honestly have no idea where a lot of these shares are, and leading to more and more forced liquidations and forced share recalls. Now, something interesting that happened on Friday that I want to point out to you guys specifically on GameStop, when we throw this on the 5-minute chart, now, I'm not exactly sure the timing of when this notice was sent out, but pretty randomly after we saw a pretty significant downturn in GME on Friday, we kind of randomly started to see it start to shoot up. So it's possible that these recalls are starting to pick up right now, and we could end up seeing that going into next week. So we are going to have to wait and see on how this is going to develop over the next week or so, but this is some very interesting stuff. So I hope you guys are excited, and that is going to wrap up this update on AMC and GME. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn it. If you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So I hope you guys are having a great weekend, and I'll see you guys in the next video.